Hey guys, Max here, and this is your daily update for yesterday, the 9th of January. It was a Sunday, of course, so markets were closed, but we still have a bunch to talk about. A strong day for crypto, some developments in Europe, and a couple other things, so let's just get right into it. So starting off with the one market that was actually open, crypto, we actually saw a pretty strong day. Across the board, most altcoins were up a couple of percent, Bitcoin was up just over 1%, and it's now sitting at just about $42,000, and Ethereum had a very good day as well. It rose almost 4% and is now sitting just below $3,200. Everywhere else, it was mostly business as usual. A few altcoins rising, some falling, but by and large, the trend was definitely upwards across the day. Of course, most markets were closed, and recently we've been talking a lot about the correlation between crypto and traditional financial markets, and how crypto is pretty much a certified risk-on asset that is subject to the same kind of behavior as tech stocks when the Fed or other central banks move in either a dovish or a hawkish direction. Now, it is interesting, to me at least, that the crypto markets were performing poorly all week in line with US equities, and then when it came to the weekend when markets were closed, crypto had a little rally and recovered some of the losses they had earlier suffered. Now, there are two things worth thinking about here. The first is that the crypto markets could start to grow into a precursor behind market sentiment, where they are the first to move as investors get more or less confidence in something like the Fed's policy. And if that is the case, then we might expect a green day for stocks today or Monday. And the other possibility is that the crypto markets really are just a more volatile US equity mirror. But because the crypto markets stay open while traditional markets close, they have sort of a moment of freedom for 2 days every week where they move more in line with the fundamentals behind each coin, how much traffic they're driving, how much use certain networks are seeing, and the like. Now, if this were the case, I would expect to see just that. Crypto markets mirroring the traditional finance space from Monday to Friday, and then breaking free and being a little bit more volatile on the weekends. Of course, these are just random ideas that have popped up in my head after observing both markets for quite some time now. I haven't actually gone through any historical data to try and backtest any of these ideas, and to be honest, I'm probably not going to either, because I'm pretty sure this would be a monumental job. I just don't have the time for something this big right now, and I'm also not 100% sure how this could even be used as a trading strategy, if it could be used to build a profitable idea, but it is something to look out for nonetheless. Now, in US politics, Nancy Pelosi, that wretched woman, has revealed that she thinks there's an opportunity to add another coronavirus relief package to the federal legislation, apparently in complete naivety to the inflation situation that the country is currently seeing. Of course, she is a politician and really not much else. A grifter, an insider trader, and a demagogue as well. She knows that talking about an aid package like this will sell well with her potential voters. She knows that talking about stimulus checks or just handing out helicopter money will do well with her demographics. Even though in the long run, in the really long run, multiple years, it will cause those very same voters to suffer under higher inflation. Now, the craziest thing about all of this is that it's coming out after a week where everything has changed in the markets, in the bond markets and the equity markets at least, and the Fed is now widely understood to be afraid of inflation and determined to target it and bring it back down. Now, why have the Fed finally changed their minds? Who really knows? We've heard what went on in their meetings, but we don't know what's going on in their minds. But there is, of course, a decent chance that this comes amid pressure from the Biden administration to fix the problem that they caused, as Biden's polling is at all-time lows, and it's not looking good for the midterm elections. Inflation is a really difficult topic for politicians because under the surface, it's good for politicians, it's good for the government, it's essentially a secret tax that people don't see as a tax. But on the bad side, it is awful for people and people recognize it as something that causes them pain and suffering. Everyone notices when their grocery bill or their rent goes up every month. The problem is a lot of people aren't able to draw the connection between government policy and rising prices. But this time it seems that people have drawn that connection and Biden's polling is hurting as a result of that. Now, Pelosi seemingly doesn't care about this, or if she does care, maybe she's just not aware of it. Now, I'm not really sure which one of those options is worth, but hearing her spout this utter nonsense about another coronavirus relief package is hardly surprising at all. Now, JP Morgan over in the US, of course, is trying to quell market fears as well, and they've come out claiming that equities can live in harmony with rising interest rates. Now, Why are they saying this? Well, of course, they want to calm markets down. They want investors to be easygoing, to keep their money in the markets, to keep their money in with JP Morgan, and keep asset prices high and keep everyone rich. Now, is what they're saying at least correct? Well, yeah, sort of, a little bit. Of course, asset prices and equities can do well in high interest rate environments, but that's not actually the question at play here. The important factor is that there are a lot of very highly valued companies around right now who have that valuation based on the idea that they're going to double, triple, quadruple, or do even better than that, increase their revenues year over year, their user bases and their profits as well for years into future. And in order to do that, almost all of these companies need capital, and raising interest rates means that that capital is going to be more expensive, so it's going to be harder for them to create this growth that justifies their valuation. It really is that simple, and that's why there are plenty of equities out there that can't just live in harmony with higher interest rates. Traditional businesses, however, value stocks and the like, absolutely can do well with higher interest rates, and it's likely that a lot of them will perform well with high interest rates. But even lots of them have a good chance of losing some value when the Fed starts to reduce its balance sheet instead of increasing it, when quantitative tightening happens as opposed to quantitative easing, and the entire investing market takes a turn. Now, in European news, there is a lot of concern emerging about all this talk of sanctions against Russia should they invade Ukraine, and it's really not too surprising at all. Who would have thought that a bunch of countries who are unwilling to adequately fund their own armed forces to defend their borders wouldn't really care if another sovereign state was invaded instead? Now, lots of European countries really do deserve an awful lot of flack here. There's an awful lot of hate directed from Europeans towards the American military, but if it weren't for that military and Americans' willingness to fight on our behalf, we would all have been speaking Russian for decades now. Personally, I think this has all gone too far. Ukraine 100% needs to be defended, even if they never join NATO. Appeasement doesn't work. It didn't work against Hitler, and it won't work against Putin either. Sometimes diplomacy has to take a harsh turn, even if it might cost you a little bit of money, as sanctions impact trade with your enemy. Now, in decentralized finance versus centralized finance news, another swing has been made by a bank against the world of crypto, and this time it's in Europe, as the bank UniCredit has announced they will report anyone who tries to send money to a crypto exchange and that their account will be terminated and shut down. So first of all, who are they going to report their customers to? Putting money onto a crypto exchange is 100% legal. It's fine. So I really don't understand what they think that threat is, but it is 100% clear that they intended it as some kind of threat. Now, the second thing here is, why on earth are they deleting these people's accounts? Again, they're doing nothing wrong by using a crypto exchange, and this behavior is just so stupid. If banks want to convince the young people of the world that they can be trusted, punishing them based on their own stupid ideas of what's right and wrong is a great way to ensure that the new generations never trust you. Banning these people from using normal bank accounts is also a great way to ensure that they don't use your services, and if anything, it will just push them further over towards decentralized finance. Now, the stupid thing here is that there was a really easy get out for the company here. This policy that they claim to have isn't even written down anywhere, they just created it out of thin air, which is a little bit ridiculous to say the least. Now, I've been pretty clear, I think, in my position that decentralization is good for the world, good for humanity, and that it is progress, and this is a prime reason why. A bank, a business that ought to have no authority over any individual, is trying to threaten their customers in order to stop them moving over to a competitor. This 100% ought to be illegal, but there's no chance of that happening because our governments are held ransom by lobbying interests, and the finance world is a big part of that. Now, at the very least, I do hope people who use this bank account, they change. End your bank account. Stop doing business with this company. Stop doing business with UniCredit and with companies who hate you and vote with your wallet. Unfortunately, I don't have an account with them to cancel, but if I did, I would. A few years ago now, I actually went out of my way to end my banking relationship with HSBC because I wasn't happy with their dealings in China, and voting with your wallet is the best way to institute change in our democracies, in my opinion. If you believe in something strongly, put your money where your mouth is and change your behavior. Unsubscribe from a business who works in a way you don't like. Stop buying food with plastic packaging if your mission is to stop polluting in the oceans. Cycle to work instead of driving if carbon emissions are the things you hate most. We all have our own goals, aims, and crusades, and they're never going to line up perfectly with everyone else's, but they don't have to. Enough of us just need to think about where we're actually putting our money, and we can institute real change. Now, I know it often seems like I'm very anti-crypto, but the truth is I'm incredibly bullish on the technology as a whole, and I'm 100% behind the missions of projects like Ethereum and Cardano. It just so happens that I think prices of almost all crypto assets are going to go down in the short term over the next couple years. Now, believe me, when they do drop, I will buy right back in again. Now, speaking of new forms of money, Apple could be moving into that sphere with an improvement on Apple Pay, which is already hugely successful. They could move into Apple Cards, Apple bank accounts, and more, and this really shouldn't be too surprising. Big tech has been branching out into other areas for years now, and it's only been happening quicker more recently. This does, however, increase the likelihood for antitrust action against big tech and Apple in particular. Obviously, there aren't any super apps in the US or Europe, but look at the impact a company like Grab has in Southeast Asia, and it's easy to see why a government might want to split a company like that up on grounds that they just might be a monopoly. Now, this is, of course, going to be very dependent on how policy in the US evolves, but should Republicans start winning again, the midterms and maybe even the presidency, then I wouldn't be at all surprised to see a huge shift of power, especially after everything that happened between Trump and the major social medias at the end of his presidency. Now, on a completely random note, Grab, the super app from Asia, went public a few months ago, and I've been watching its price with great interest. It's a company that I'd love to own because it just has such huge prospects for growth, and I think it's seriously underappreciated on the tech side of things here on YouTube or just in US markets in general. So I would love to be an investor. I'm just not quite happy with the valuation yet, but every day when the price goes down, I feel great because I'm getting closer to that buy-in point. Now, we have spoken a lot about bond yields over the last week, basically because it's been a really visual shift of market sentiment and what the market's going to do over the next year, and it all happened very quickly, and it put to bed some arguments as well, most of which were something along the lines of inflation isn't real because bond yields are low. Now, for anyone looking for a really good recap of what happened, I'm going to link to a Twitter thread down below that explains it perfectly. Also, if you haven't already, then give me a follow on Twitter. Whenever I see a really high value thread like this one or charts that I think are valuable, I retweet them, I put them out there. And when I do tweet myself, it's usually something slightly controversial or at the very least slightly angry. So it's usually worth seeing as well. Links for both of those will be in the description down below. Now, there is also a lot of talk about Djokovic and the discrimination against him by the Australian government, but I'm not really sure how many of you would actually be interested in hearing my thoughts on that. It's not really finance or investing related at all, but let me know if you want that covered, and when we see maybe a conclusion to that event and the saga, maybe I'll give you all a recap and tell you what I think of the whole situation. Now, that is it for the day. I'll see you all again tomorrow. If you enjoyed this video, then leave a like and a comment to bless the YouTube algorithm. If you want more content like this, then check out our Patreon and join our community of investors. You get access to our Discord, loads of exclusive content like insight into my portfolio and buy and sell alerts for all my own investments. There's a link in the description to masterworks.io, a site that allows you to buy fractional shares of art from world famous artists like Banksy, which can be a great way to diversify your portfolio with non-market correlated assets. It's completely free to sign up, you don't have to buy anything, you don't have to hand over any card information, so if that sounds interesting then make sure to check it out. There's also of course a link in the description to BLOCKFI, which will give you up to $250 in free Bitcoin when you use it. You can also get 9% interest on stablecoins like the USDC, which is a far higher rate than you get from any savings account these days. Just make sure not to use Tether. Thank you all for the support, thanks for watching, stay stoic, until next time.